Hello everyone, we're back. This is the Property Web and I'm Tom Carr. Lots to delve into today. So if you've travelled here from the UK, like me, or you've started to think about investing in property, maybe you're drowning in a bit of sea of data and research and all the different opportunities out there, this one could be for you. Today we've got a fellow Brit who's done his fair share of travels around Australia, and he's now a property buyer. We've got Tim Watson. Thank you for coming on, Tim.
Great to be here, Tom.
Welcome. You are out of your corporate bubble. You started your business. You're a property agent, buyer's agent, property agent.
Property strategist and buyer's agent.
Boom, there you go. And you are helping people on their property journey.
Absolutely.
And there's lots we'll unpack. It's, there's just, we'll get into it. There's lots to cover. So I think that maybe even we'll just start there, because buyer's agent, property strategist, are there any differences? How do you describe what you do?
There's a big difference between a property strategist and buyer's agent. And for me, the property strategy element is all about understanding clients' needs. Everyone's got a long-term goal, but you've got to, as a buyer's agent, you've actually got to tailor what you're trying to buy with regards to what meets each individual client's needs. And so for me, the property strategy element is crucial.
Okay.
And to give you a little bit more about what does that entail, the first thing I do when I sit down with clients is really understand what their long-term goals are. So for instance, are they investing to try and build a passive income over time to help with retirement? Is equity the primary driver of what they want to do? Really, you've got to take the time to understand that. Most people have no idea of how to actually build a portfolio, how long it's going to take, how many properties they need, what sort of yields they need. And so the first thing I do is model all of that for them so they can see the sort of time frame that they're working towards to achieve their goals.
Okay, so that is the strategy, and that's
correct.
The big first step, I guess, that you would go through. I mean, you wouldn't do it. You wouldn't meet someone, take them on the journey without that strategy.
Correct.
That's probably where people go wrong.
Yeah,
and
absolutely.
That's where the experience and skills comes in. And we'll definitely get into that as well, because you've built your own portfolio, and it's just something that you can. It's a good base, I suppose, to start the conversation with people, just to show maybe where you've gone wrong, maybe where you've gone right.
Yeah, absolutely.
And where you're heading. So,
and I mean, you touched on obviously with the accent. I certainly wasn't born here. My wife and I moved to Australia in 2006. So I am Pommy, as you might have guessed, similar to yourself. And so, we came over here and we had dreams of owning our own home. But at the time, it seemed like a bit of a pie in the sky. So, I was lucky enough to get a corporate job. And I worked in the pharmaceutical industry for 20 plus years. I worked with one company here for almost 17. And so that really set me up to be able to start investing myself. And we went down the tried and tested route of buying the permanent place of residence, and then the investment portfolio came later.
Okay, so you weren't rent investing, which is what a lot of people are thinking they need to do now. You started with principal.
Yes.
And when was that? Like, how long since you'd been in Australia did that sort of come back?
So we arrived right at the end of 2006.
Did you have PR by then, or that's something you had to work towards?
That. So we actually came here, no job. And the idea, I backpacked around Australia when I was 18, sadly, many, many years ago, and loved Australia. Hitchhiked all the way up and down the East Coast.
Yep.
And so I had a really good feel for the quality of life here. And so, my wife and I decided, funnily enough, everything they say about England is true. It's pretty wet. When it's in winter, it's very dark. And we just got sick of going to work in the morning, being dark, coming back, still dark. And Australia offered so much. So we moved here.
And she's a Brit as well. So
she's actually from the Czech Republic.
Oh, there you go. Okay. But Europe, so no direct connection to Australia. So you really were starting
completely
at ground level, which is a lot. I see a lot of those people as well. They're kind of sold on the dream, the warmth, the sea, whatever that Australia's got to offer. So so to talk a little bit about that then. So you've kind of come here with nothing essentially.
Yep.
Maybe you got the job, but what's the path to that first property?
Well, firstly, we rented when we first arrived, and we just got further and further north. So we started off in Kirribilli, gorgeous suburb opposite the Opera House, 1-bed box flat there. And over time, we moved further north. So we then went to Artarmon, Chatswood, started a family. So we actually needed to move into a house and started renting there. And it was that point, once we had our second child, that we started to think we need to get into the market. And so, we bought in the Upper North Shore, and we did go down the route for security of actually buying our permanent place of residence first. And rent investing at the time wasn't actually anywhere near as popular as it is now. So for us, it made sense to buy our home as this first starting point.
And you've kind of hit on a big point here, because a lot of people I see, that is in their mind, but they sort of almost don't see it's realistic in Sydney, especially. I typically see most people starting from Sydney, so that's where house prices are just out of control. So looking back, or maybe thinking of that person who's doing what you're doing now, is that your strategy the best one these days? Or?
So not necessarily. And as I said, rent investing wasn't something on my mind at the time. So for me, it was just, how can we get into the market as soon as possible? What then I think changed for me was I wanted to then take control of my retirement plan. And that's where investing in property to me made a lot of sense. So coming back to your question around sort of rent vesting, the reality is property prices in Australia have changed so much that, as you said, if you live in Sydney, there's a big question mark, obviously depending on your salary, as to whether or not you can afford to buy a house in Sydney. And so what's happened over time is more people have started opening up to the idea of renting where they want to live, but investing in different markets. And the beauty of Australia is there are so many thousands and thousands of suburbs in different states that there's always going to be a market that offers fantastic potential. So while one market might be slowing down, there's another market that offers huge potential. So what I now help clients do is really understand the data and the analysis behind why they would invest in a different market. And in most cases, it's far more affordable to be able to achieve that than to buy a permanent place of residence in Sydney.
And essentially, you did it slightly differently, but that's what you've done since after buying that family home. And
Correct.
So, and you've seen that transition. I mean, and it's interesting you mentioned that there are markets sort of going up and down. I mean, it's real. I mean, but that's where it gets really tricky, right? Because it's not a constant. They literally, one goes up, one goes down, and it's finding the waves at the right time.
Correct.
I mean, probably that boils down to the essence of your job now is to find those probably areas before they hit.
Absolutely spot on. And so, look, I use my own personal experience now when I understand clients' needs and help them actually find the right property in the right market to invest in. And I think the trick is you've got to start with the market. You've got to understand why there are certain dynamics in place for a market to outperform the national market. And a whole range of factors comes into that. Fundamentally, what sort of infrastructure is going into a market or suburb that's going to help drive up prices? What sort of supply is going to be there? What sort of demand is in the area? And so I look at a range of different factors. It could be infrastructure, could be transportation, stock on market percentage, inventory levels, what sort of building approvals are going into an area, vacancy rates. So I use very sophisticated data analysis that enables me to look at three different elements of a suburb. So one is capital growth potential, one is the cash flow potential of an area, and the other is the risk level. And so when you roll all of that up, you're able to compare suburbs to each other. And I then send my clients a report of the suburbs that we're considering for them so that they can see firsthand what are those dynamics that give me and them the confidence to invest there.
Yeah, because I mean, you could go on real estate now and sort of just do a rank order on price and you could get some really cheap houses out there.
Absolutely.
There's plenty you can buy for sort of 100, 200,000 or something, but
Yeah.
I'm guessing that's not where you'd start because the risk would be a little high.
And you're absolutely right. And look, I can remember, this was many, many years ago, but I can remember people getting really burnt by investing in mining towns because there was a massive mining boom. Everyone jumped on the bandwagon. I'm sure some people did really well, but if you got that timing wrong, equally people lost hundreds of thousands of dollars. And that's because fundamentally, when the mining boom stopped at that time, there wasn't any other there weren't any other economic drivers to warrant price growth. So when you're investing in different suburbs, you want to have a range of different economies, things that are going to help drive growth over time. So, yeah.
So if we step back, you've landed in Australia, you've done a bit of traveling, you've done you've rented, you've bought, you've got your corporate job, you've got the family, so it's all going well.
Yep.
But then you've kind of, like a lot of people, you kind of step back and think, well, what's next? What does the future look like?
Correct.
You've decided to start your own business, similar to me, and you're on this new adventure. So you've started Bricks to Wealth.
Correct.
And you're on that journey. And so what does that actually look like in practice? Just how do you even start this kind of move from idea to action and like get a website? What is some of the fundamentals?
So it's a great question. If it's okay, I'll step back a little bit on the journey as to how I started investing in property.
Go for it, yeah.
Because fundamentally that was what ultimately led to me starting Bricks to Wealth. And look, I worked in a corporate job, and I wanted to take control of my retirement. I had no intention of working until I was 65 or later. And so I was looking at, okay, what do I need to do to retire earlier? I like the torture of golf. And so I wanted to play more golf as I got older and open up that opportunity to spend my time differently. So I started listening to, funnily enough, a lot of podcasts on property investment. And podcasts had just started to become quite big at the time. Things like the Smart Property Investment Show, Pizza and Property were well-known property podcasts. And so, I realized super was an important part, but I thought investing in property was going to enable me to get there quicker. I then made a number of mistakes with regards to my first investment. I didn't use a buyer's agent because I thought it was too expensive. Mm-hmm. And so I tried to do it all myself. That probably set me back years with regards to where I ultimately got to, because like most people, I suffered from analysis paralysis. I didn't really know which market to invest in. I didn't have access to the data to enable me to make that educated decision. Mm-hmm. So I bought a unit in the Gold Coast purely because
jumped on the bandwagon.
Absolutely. We'd been there, lovely spot, and I figured, what's the worst thing that could happen? We might use this as a bit of a holiday home. How many times do you think I ever actually stayed in that place?
I'm guessing it wasn't too many.
None.
Never. No.
So no, we never actually got back there. But it taught me some amazing lessons. And one is, I now never buy units. I only buy existing houses for clients. And there's a good reason for that, in my opinion.
Yeah, what's that?
And that is that I learnt firsthand the strata is an absolute killer of the cash flow. And for me, I wanted to build a passive income over time as well as see equity growth. Mm-hmm. So the passive income has been a challenge with that particular property. Funnily enough, I actually sold it a month or so ago. Okay. And the equity actually turned out pretty well. So I bought it in 2016. It more than doubled in value. But that's partly because the Gold Coast has boomed in the last sort of 4 or 5 years. So it played catch up.
So it wasn't the worst investment?
So it definitely wasn't the worst investment. But I can also tell you, if I had followed the approach that I now take when investing, I could have found markets that would have far outperformed, particularly over the first sort of 3 to 5 years.
I think that's the interesting thing, that I see. You almost can't lose over the long term, right? Anyone can buy a property and wait 10 years, 20 years, you will have made money, but will it have enabled you to buy additional places during that time, reinvest, and kind of just end up with more, essentially. Yeah. And
that's right.
yeah, I think that's just an interesting kind of meta question. It's like, where do you want to be? And I suppose that's what perhaps people miss in the journey. It's like they don't have a goal initially; they just kind of get started and don't really know what the end goal could be.
And that's where the strategy bit is really important. So when I talk to clients, I often tell them that really the growth over the long term, you're absolutely right. Things are more likely to average out. To build a portfolio, the growth in the first 1 to 3 years is crucial, because if you've got the capacity to actually invest and you actually buy a property that does really well in those first 3 years, and this is where, as you would know, Tom, the mortgage broking role that you have is so important, because ultimately investing is a game of finance. You have to be able to get a loan, which I know you can do a fantastic job in helping clients get the best loan for their investment. So it's by tapping into that that really opens up opportunity. And if you see substantial growth in those first 1 to 3 years, they can actually pull that any equity that they've got out, reinvest, and that's how you grow a portfolio much quicker.
Yes, they're not necessarily having to come up with a massive deposit each time. I mean, maybe everyone's different, but you can use equity growth to start building that portfolio if that's what you're after.
Yeah.
So maybe so we'll wind back again. So you bought that apartment. It's questionable whether it's the best thing at the time or not, but it got you into the game.
Correct.
What sort of did you go for next?
Yeah. So once I'd actually learnt from that, and I do believe, for me, it was a relatively low cost entry to start investing. Mm-hmm. It allowed me to dip my toe in the water, but then for the next one, I decided I needed a buyer's agent's help.
Oh, okay.
And so I got in touch from actually the podcast that I listened to. I came across a number of different buyer's agents, and so I chose one that I thought could help me. Got over the fact that I had to pay a fee, and he ended up finding a great off-market property for me. And that's one of the things that as a buyer's agent you should have access to, is off-market properties. And I'm very transparent with clients. Sometimes I will find a property that's on Domain or realestate.com and it'll be a great fit. But equally, it's through estate agent relationships that you can actually get access to off-markets. And that can open up the potentials for some great deals. So for me, we bought a property down south side of Brisbane, and it had potential to put a granny flat on as well. So bought the property, put a granny flat on, and it's been dual income ever since.
And was that the approach you were going with initially? Like it was. Okay.
No, it was quite a deliberate approach that I discussed with that particular buyer's agent. For me, because I wanted to take control of the retirement, the passive income growth was important. So Adam, in my portfolio now, I have a number of dual income properties that really, really help with the cash flow. Now, it's interesting. It's not a real focus I have with my clients. I tend to prioritize the market above all else. That if you invest in the right market, you will see growth because of the market dynamics.
Yeah, and that's another, call it strategy, but going after, I suppose you were going after yield in buying that dual.
In that case, yes.
Yeah, so you want to have a larger amount of money to cover your mortgage, I presume, so that you're not chipping in quite so much each month.
That's right.
Versus going after the capital growth, which it's a tough one, isn't it? Because you obviously don't want to be shelling out money all the time into an asset that may not be growing. You don't know at the time.
Yeah.
Buying for capital growth does come with a little bit more pain, in that you're having to chip in potentially a bit more.
It can do, but I think you can get a balance between capital growth and cash flow. Mm-hmm. Now, I would always suggest to clients capital growth is the most important thing, because fundamentally you want your investment to grow in value over time. And as we just talked about, you can then tap into the equity of that to help grow your portfolio. Equally, when you get to retirement, it enables you to actually maybe sell down a property and benefit from the growth in equity over time. cash flow can become really important when it comes to scaling your portfolio, in that the more cash flow that you've got from the investment, the more likely you are to access more lending. And yes, it certainly helps with building up passive income.
Yeah. Okay. So we touched on a few properties you've bought, and there's a few. Sounds like there's a few more in the can as well. So let's go back to that business moment. You've sort of, I guess you've now seen the journey. You've bought properties, you've used a buyer's agent, you've seen what they add to the process. And I would imagine that would have been quite a hard decision, because you clearly have the passion for property and you like the data. You would have had to give them some control, like give over some control to them.
Absolutely.
To find it. And but so what were the major things that you took from that experience with working with the agent?
So for me, firstly, there's been an explosion in the buyer's agent space. Mm-hmm. And what I would recommend to anyone who's considering using a buyer's agent is just really make sure that you do your homework on what they offer. Mm-hmm. Look, my personal experience is I've seen a huge amount of value from using buyer's agents, and I've used multiple. So I've used a number of different buyer's agents. And I've seen how they individually work, and they have been very different. One that I used had great contacts, but wasn't really willing to share even the area that they wanted to buy in for me, because they were concerned that I might go away and start doing all the work myself now that they've told me where to buy.
Okay.
Another buyer's agent I used took a very different approach, which was they shared a lot of information on the area and why they would recommend it. And so I think it's really important to understand the buyer's agent, the capability that they've got, references that they can provide on people that they've supported and how they've gone about helping them. And then I think there's an important factor around the personality fit of who you're going to work with, because you want to build a good long-term relationship. The other thing I'd say about buyer's agents and the fact it's exploded so much is there are some people that call themselves buyer's agents, but essentially they're selling off the plan properties. Mm-hmm. So they're getting a commission from the seller, and they're getting a buyer's agent fee. Now, in my opinion, that's not really a buyer's agent. A buyer's agent should be working purely 100% on behalf of the buyer. In my case, if I negotiate any reduction in fees, obviously when it comes to negotiating the price of the property, I'm trying to get the buyer the best possible deal. Everything gets passed on to my client. And so the only way I actually make my money is from the fee that I charge the client. And so, they benefit.
Very transparent, really. Yeah.
Completely.
So are there particular types of people you see who want this help? Like, I know it's always hard to kind of summarize your client base, but are there features that come out that you've seen?
So there's definitely a couple of characteristics. One is people tend to be time poor. Mm-hmm. And I would say probably the biggest sort of help I can provide people is saving them time. The longer you take to actually buy the property, if it's in a hot market, that price could be going up thousands of dollars very, very quickly. Mm-hmm. And I think a good buyer's agent hopefully is going to actually, whatever fee they might charge, the service is going to pay for itself. Now, that could come in a number of different ways. It might be the money saved in negotiating the right price, finding an off-market property that no one else is going to have access to. It might be the negotiation of the property management fees, which I always do for clients, building and pest inspections and the review. The due diligence is crucial. So when I talk about due diligence, I'm talking about flood mapping, bushfire mapping. Is a property heritage listed? If you get that wrong, it can cost you thousands and thousands of dollars. So, for instance, Townsville. A lot of Townsville has a history of flooding. And I think recently, within the last year, it's flooded again. So if you unfortunately chose the wrong place and didn't do the due diligence, that has a massive impact on your investment. So, yeah. Yeah,
the time, I mean, really, if you're in a regular job or if you've got your own business, I mean, that's what you should be focusing on.
Yeah.
It's not to say you can't go and buy a property, but it's, again, the right one, the right market. There's so many different factors that go into it.
Yeah. The other thing I'd say, so time is definitely a factor. Some of my clients are relatively young, so they're buying they are rent vesting, buying their first investment property, and they just didn't know where to start. And so that's where using an expert who understands the intricacies of buying interstate, and different states have very different laws and regulations, the pros and cons of different markets. That's where it can minimize risk if you're purchasing when you use an expert compared to trying to do it yourself.
Yeah, and I think you mentioned earlier the relationship aspect, and that's actually why I like to have a pool of agents that I work with, because there is something in the journey that you go on, and you really need to sort of, why not enjoy it?
Oh, absolutely.
And so there is a buyer's agent for everyone. I think it's actually quite an exciting moment, and people have, especially if they've saved for a large deposit, they've put years into this, and this is kind of like you're meeting them maybe for the first time, but they've put a lot into this journey already before they get to you. So they might as well have a good connection, have trust, and sort of see that this could be something that they could do again. And so that's why this is maybe a useful forum, just to sort of get you out there beyond the paper, beyond the text, and so on. So are there things? So I mean, I guess the big elephant in the room for me is the 5% government guarantee scheme, which is, I suspect, is changing the market. Are you starting to see any effects from that? It's only come in the beginning of October, so correct. It's pretty recent.
So it is very recent. I think, if anything, it's just going to put more pressure in the system, and probably going to result in an increase in price over time, because more people now have that ability to access finance with the 5% home loan scheme. You need to really understand the intricacies of each state and sort of the property price maximums that are applicable to the 5% scheme. But yes, I think that, combined with the interest rates coming down over time, has definitely put more upward pressure on price.
Yeah, there's that sort of FOMO aspect at the moment. Correct. I got a call from someone just before we started, worried about his finance coming through and missing out. And there's just, the lenders are kind of putting back their SLAs. There's a lot of new applications coming in. So yeah, we'll see. These cycles come and go. I wondered whether you could just take us through a client story. Just someone, I always like to sort of hear how people get into your process, and how, maybe some of the more interesting clients out there who've come with you with a difficult situation, or anyone that you can think of to.
Yeah, so I've worked with a range of clients, some from being relatively young in sort of the mid to late 20s. My most recent client was someone who's based up in Cairns. They're actually teachers, I would imagine late 30s, early 40s. They wanted to start building on their investment portfolio. And so, as I talked about earlier, the first thing to do was to really understand their goals, what they were trying to achieve, and the time frame. They had a very tight time frame. They wanted to actually retire within a 5-year period, in a really good position.
Had they bought before?
They have bought, and interestingly, with some success, but more of sort of the mining areas, which hadn't probably performed as well as could have done.
Okay.
And so, that very much they just wanted to talk about the timeline and understand what they needed to do to achieve their goals. So just from looking at a whole range of different markets, in the end, we decided on Melbourne. Now, Melbourne is probably one of the ugly ducklings of the property market over the last 5 years. I mean, if you look at most of Australia has performed incredibly well. The Melbourne market is the one that's been lagging behind. Now, that doesn't guarantee that it's going to go up, but it does certainly offer a different perspective in that it's got more potential for growth. From an infrastructure point of view and a population point of view, Melbourne's going to be one of the most populous, I think the most populous capital city in the future. From a supply perspective, not building anywhere near enough homes to meet that demand. But I think with Melbourne, the really important thing is you have to get down to suburb level. So you can say Melbourne's a great investment. It's not true. There are places I would not touch with a barge pole in Melbourne for various reasons. Some of it might be socioeconomic factors, could be proximity to the airport. There are places that I definitely wouldn't buy. But for that particular couple, I did all the analysis from a suburb point of view, and we identified one that had really good capital growth and cash flow potential. The other thing cash flow is relative. Because of land tax in Melbourne, you have to realise that your cash flow isn't going to be the same as, say, a suburb in Brisbane. But we decided that Melbourne ticked all the boxes from the capital growth perspective. And the property that we ended up finding was a 4-bed property. This is where having the estate agent relationship is really important.
Okay.
Now, this wasn't an off-market property. It was actually on realestate.com. But we actually managed to pick it up for $755,000, which in this particular suburb, I haven't seen any 4 beds for less than $800,000. But by having a really good relationship with that agent, I'd equally bought through him previously for another client. And so we had to move very, very fast with regards to the building and pest and getting everything signed off. But I think we negotiated a fantastic deal to get to that market.
That's a good number right now. I mean, it's changing all the time. It's just on a sort of upward trajectory. But so they're done. They're in. They're
in. So we settled on that 2 months ago.
Wow. Okay.
And we'll probably take a break now for the rest of this year. But next year we're talking about, okay, what's the next step? And so I'm always doing real-term data analysis for clients. So what I always do is pull together the analysis on the different markets, different states, what are the suburbs within the states that I think have the best potential, and we'll go back to the drawing board and look at where we invest next. The one thing I would say is it's often good to be able to look at different markets. You don't to spread the risk and diversification. I would normally recommend to clients, unless they've got a really, really strong desire to buy a number in say Melbourne, and you could spread your risk by buying in different areas of Melbourne because it's such a big city. But I'd normally say you probably want to spread your risk into different markets and states. Yeah,
no, that's fascinating. Listen, what have we missed anything that you wanted to touch on? Because there's a lot there. I think this should hopefully give people an understanding of what you do and why you do it. I think it would be a great sort of chance to sort of work with you on if you've got those property dreams and you've maybe struggled to kind of make the progress because you've felt that frustration and now you're kind of you've got over it and you've made a sort of full-time job of it. So but is there anything that we've missed that maybe you'd want to get out there? Sort of if you were that aspiring person, that aspiring Tim 20 years ago or something, what else?
Oh, look, I think if you go back to basics, why use property as a vehicle for building wealth? I never had much success in investing in shares. In fact, I could probably say I've lost more money investing in shares than I've made over my lifetime. And so for me, I grew up playing Monopoly over the years. I've always had a fascination for property. And the reason I do what I do now is because I just love real estate investment. It's why I personally decided to invest in property myself. And now I've just taken on a different approach through Bricks to Wealth in how do I do that for other people. But I think fundamentally, one of the key reasons I like using property as my investment and wealth choice is leverage. It's the concept that and now it could even, if you're a first homeowner, and I have to admit I specialize in investment properties, but if you want to buy your first home, now you've got access to this 5% home loan scheme, and you can borrow 95% of the value of that home and avoid lenders' mortgage insurance. So you can invest in property, but you still get the benefit of any appreciation over time. So that might be for the permanent place of residence. If you're building an investment portfolio, if you can borrow 80% and come up with the 20% deposit plus your initial buying costs, you're still going to benefit from all the equity growth that hopefully comes from there on. So I see leverage as a absolute key factor as to why property for me makes sense. And not only do you get the equity growth, but you get hopefully a passive income that if you're choosing a market which has really tight vacancy rates, hopefully that enables you to put rent up over time. And ultimately, once you've paid the mortgage off, you then have rental income, you manage the costs, but that should provide you with a pretty decent passive income when it comes to retirement.
That's what a lot of people want, isn't it? You know, yeah. All right, Tim, it's been great having you on. Really appreciate you sort of stepping through some of that journey, and we'll stay connected. There's lots more to come from both our businesses, which is great. How can people get hold of you? What's the best sort of approach? What do you like people to do when they reach out?
So firstly, I'm happy to have absolutely no obligation call with anyone. I love what I do. I love talking about property and understanding what people are trying to achieve through potential property investment. The best way is if people just want to find out more about me and my business, then brickstowealth.com.au is the best website.
It's going in the notes.
My email is tim.watson@brickstowealth.com.au. And I'm equally happy to share my mobile, which is 0439 165 180. And people can either go through the website and book in a call or call me directly.
We will put it all in there on where we're going to post this. So thank you. Yeah, great to have you on, Tim. Thanks for listening, everyone. And we will see you next time.